China, of course, came out yesterday with, after their strong manufacturing data as well, tightening monetary policy again, implementing it again yesterday. What does that mean for the markets?
Well, what it means is that, the Chinese are still very worried about the long-term sustainability of the recovery, despite the ISM that came out yesterday. That's very positive. I think the question which I've raised is around the actions of the European and American government in the second half of the year in removing the stimulus. Because once the stimulus has been removed, there's lots of question as to what happens thereafter. So there's a view that says maybe growth might slow down. There's another view that maybe things will stay the same. There's another that says no, the momentum will continue for growth. So it's still very uncertain out there, and hence the Chinese action should be understood within that perspective.
Lumkile, to just bring it back to the South African market quickly, finally, we also saw positive manufacturing data coming out of South Africa yesterday. We were up for 6 months in a row with 53.6. Does this mean that South Africa is out of the woods?
Well, South Africa has not had a huge negative impact, particularly in terms of its GDP numbers. Where the impact has been felt has been in employment, because we've lost over 1 million jobs. But also in the manufacturing sector, we've seen a lot of bad results coming out from a lot of the companies in the manufacturing sector. So it indicates that the worst is over. We may see some improvement in the results that are coming out in listed companies in the manufacturing sector. But the challenge also that faces South Africa, because we're an exporter, for us to create those jobs in the manufacturing sector, we need to see the growth that we're talking about in Europe and America being sustainable, so that we can be able to now bet it down that post-World Cup we'll see manufacturing driving the growth of this economy.